David Stryzewski with me. The Fed didn't hike. Powell pointed to rates staying higher for longer. Rising Treasury yields. Are stocks in trouble? Real trouble, David.
Hey, great to be with you here, Stuart. I do not believe that the stock market has kept up with the carnage that we've seen in the bond market. All right. And so one of the things that we're seeing right now for this higher Treasury yield is just one of two things. So number one, we had Janet Yellen surprise us to the upside here that we missed our budget by a mile, and we need to $1.9 trillion just to finish the second part of the year. That's the equivalent of 10.4 billion extra in printing every single day. And you couple that with a Fitch downgrade right now, that means that we're less credit worthy. That means that it's more costly for us to be able to borrow money. So as we're looking at the Fed and we're looking at this idea of easing coming, and that's what's been really driving these markets right now. The big update that we got yesterday was that the dot plots went from pricing in a 1% price cut next year to just going down to 0.5%. I think this is what Powell's talking about when he's saying higher for longer. We were supposed to be in easing here as of July. That didn't happen. Now we find ourselves looking at a lower amount going into 2024. So there's not a lot of great news here with this higher Treasury rate, though, because it's really hitting those mortgages, really impacting those banks.
I want to get to that point. 4.47% yield on the 10-year Treasury. That's the baseline for mortgages. Looks to me like we're going towards 8%, 30-year fixed-rate mortgages. Are we?
I completely agree with that. In fact, I've been saying this for a couple of years now. We're probably going to get to a much higher interest rate environment on mortgages, and we're going to probably have to consider 40 and 50-year products as we look out into the future. Because if we can't get rates down because the U.S. is not as credit worthy, we have to borrow at higher rates. We're in a different credit cycle today. And so extending duration is the way that you can improve that. But ultimately, there's going to be pain and carnage here if this continues as a trend.
All right. Existing home sales out at 10 o'clock this morning as well. David, thanks very much indeed. See you again soon. Now this.